Welcome back to the channel. We're going over the SP 500, the Nasdaq 100, exactly what happened on the market today, how we knew we were going to start getting a drop into today, and all the indicators that led up to this. Before we go into how we're going to be moving tomorrow and the exact news coming out tomorrow and how we see that coming out, I want to let you guys know, and I have to ask you to consider subscribing and liking this video. Leave a comment down below if you have any questions as well. But I'm giving you these videos every single day to keep you updated with the market and exactly what I am trading. Now, before we get into the video, I do want to address positions that I had when I was letting you guys know. I also posted these on Twitter as well. I posted Costco. We talked about this yesterday, 498. I mentioned in the video. What happened today? You dropped down to 490. I mentioned Netflix earlier. This one, you were at about 176, 177 when I got into it. Posted on Twitter. You dropped down to almost like 174. It was pretty nasty near the end of the day. I got all those positions. Looking at the market now, this is, in my opinion, setting up for a make or break situation for the economy as a whole. Now, let's go over exactly what happened on the day. This is Nasdaq futures. We will be covering the S&P here as well. Now, I want to highlight this morning at near open, you did get a little bit of a bounce. You had, once again, I've been letting everyone know, the only way you turn bullish is a break and hold above 12,000. Below that level, what are we expecting? Downside. Same thing happened yesterday. Rejection, 12,000. Today, rejection, 12,000 on Nasdaq. It has been the easiest shorting opportunity of the past 48 hours. I continue to let you guys know this is my projection. And I also let everyone know on Twitter as well in Discord, which, again, if you're not subscribed, you don't know anything about Discord, link is down below. However, in my opinion, there was no way that we were going to get a pump or any type of upside push that would hold into CPI data, which we'll cover here in a second. So we knew playing back into this trend was clearly the way. There was just no way we were going to push up going into this. Now, we mentioned yesterday, 11.75, very big level. Pre-market, you actually ended up testing it. Mentioned this as well. We came down once again, down to locally about 11.7 flat. You bounced once again, and now pushing back down in the after hours. Now, I think after hours right now, it's not that big of a deal. Not going to really matter. I'm not even really watching this. Tomorrow, your CPI data will be huge. What do we need to mention? You have your month over month. And then, of course, going into tomorrow, your year over year, which they are projecting is going to be pretty terrible. And that's from the White House. We covered that specifically yesterday as well. The White House set the tone for today. And if you thought you were going to have a bullish day today when the White House comes out and says they see CPI is going to be growing rapidly and out of hand. So right now, your year-over-year projection, I believe right here is an 8.8. They're anticipating this to come out almost a 10. That could be absolutely catastrophic for the economy. These are your beats that you've had so far, and I'm going to cover with the kind of moves that we've had. So in the past two CPIs, you beat by 0.2 and 0.3. If we by some chance go to 10, that'd be an over 1% whole beat on that, which would be catastrophic for the economy. We come back here to the 4-hour chart just to show you, to give you a look at what's happening here. Again, this was June 10th, your last CPI. You tanked. You dropped literally from 12.3 down to 11.1 and 1, 2, 3, 4, 5 days, over 1,000 points. Really, in the matter of 2 days, you dropped from 12.3 down to 11.3. The time before that, CPI came out when you missed. You dropped from locally 12.5 down to 11.7 in a day and a half. This is our next projection. This is our next move. We've also mentioned going into previous CPI days, what happened? Going to the last projection, you started dropping the day before. You also had a White House leak. We had a White House leak this time. You dropped, and it's looking like it's setting up for another catastrophic drop. These are just what I'm looking at. These are just the same signals I'm looking at. There's no, hidden news that I have. There's no hidden indicator. It's all based on price action, right? So coming into this, You are seeing buyers step in trying to hold that 11.7 range because, like I said, there was not a real chance you were going to tank today, but we did expect downside. That's why we had Costco. That's why we wanted to see those Costco positions. Those made almost 100% roughly for almost everyone. That's why those were so lucrative. Now, I wasn't going to hold those going into this because we don't know what's going to be said. We don't know how they're going to twist it. Now, the White House is trying to say this is all based on gas, and that's why CPI is inflated. And I don't want to go down that trail, but this is just the data points that we need to be talking about. So that's the concern here. That's what I'm looking at. Another big thing that I want to mention was going into this is if we come back and look at cheddar flow. Jay Ream posted this a little bit earlier at the end of the day. In the after hours, there was over $28 million in SPY puts hitting the market, hitting the tape in the after hours, being bought. All of these are being bought. Huge sweeps coming in, betting on more downside. Now, what I will say, I'm not going to solely come out here and say that only people are betting to the downside. When we go to Bookmap, this is an extremely useful tool we've been using for a while here on the channel. As we come in here, we look at the day. When we were looking here, we were seeing interesting activity. You had pretty bullish volume to start the day off, which was pretty interesting. And then you were also getting these dark pool buys. This blue line to the upside represents dark pool buys. You were seeing massive buys. You saw a very big one right here around 10:30 a.m. Central. But I want to highlight something very big. This red line right here. If you're not familiar with Bookmap, what this represents is a heat map on the market. And when you're closer to red, the closer you get to red, that means there's the most liquidity. And to break this down specifically, you had 3,000 lots. So you had millions of dollars stacked right here, preparing to hold the market up, or the ES futures at 38.45. And then this person got a little bit more aggressive. They moved those contracts up to 38.50. And then you started to see things get interesting. And at this point, I told everyone in Discord, once this level breaks, it's over. You're dropping, you're going to start your descent. And little did you know, within the next hour from 12:30 to around 1:30, you came down test. And as you see these bigger bubbles, you can see large amounts of sales started to hit the market. Almost 3,000 in volume right there being sold off, hitting this whole order. And from that level, you saw price just start to plummet. And what happened there? There was no liquidity to hold it up any longer. So back here, you had liquidity holding you up. And then once they sold through it, boom, you tanked all the way into basically power hour, almost into close. And that's kind of how the trend for the day went. But again, through this, you were seeing buying occurring. So what I will say about those puts being bought on SPY, that could definitely just be a hedge for these funds and how they're trading right now. So I don't want people to think, oh, Tyler said, there's 28 million SPY puts coming. That means we have to drop tomorrow. That means data has to be terrible. It's not what I'm saying. Me personally, if I was so positive, I would be all in on puts. That's why I took my money and I ran. It was an extremely profitable day, extremely happy about the day, but I know I have to take the money, especially in this market because nothing is guaranteed. And we've seen us run on bad news before in this market. So what am I going to do? I'm going to come really quickly over to SPY and show you what I'm looking at here. SPY, this is the 15-minute chart so you can see. You're operating in this bear pennant. Once again, you're operating here. We mentioned it yesterday. Rejected off the top, came back down, rejected from the weekly, pushed back down. You're at the bottom of that level. Very, very big stuff happening here in my opinion. Again, very similar movement back to when we had that movement back here prior to CPI data. Prior to CPI data, you started dropping right here. CPI data came out, you tanked even further. What happened here? You started dropping. CPI data is tomorrow. I'm just saying things are lining up. So that's what I'm looking at here. But I want people to be prepared about what am I looking for next based on this data. If this data comes out poorly, 10% plus on CPI, I anticipate new lows to be made. I'm going to come out to roughly the one-day chart. I'm going to give you my overall price targets because we haven't really been over this here in a minute. I'm going to give you two levels that I am looking for. Bear with me. Number one, this was our key level we've been watching for some time. Locally, 361 to roughly 357. However, I'm going to give a bold statement. pre-COVID highs. That's where I'm looking for us to go. I'm looking for locally 343, 344, maybe down to 337, the top of that range. I'm looking for some massive downside here. Now, we have a lot of catalysts coming up here as well. We have earnings season coming in, CPI, and then to finish us off, possibly, the last bullet in the chamber, GDP. 2 GDP misses will be absolutely catastrophic for the market. Even Fed Barkin said today, these are things we have to be looking at. So ultimate downside locally, 338, 343. Target number 1, 358 up to 361. Sorry, did I say 338, 343? That's what I'm looking at there. This is what I'm looking at if you start to break down. If data comes out poor tomorrow, very clear about that. If data comes out poor tomorrow, it comes out right at market open. You can see it on investing.com. It'll be available. Boom. I'm anticipating a touch of at least the bottom, at least 362, but coming down 358, and then from there, boom, around the 340 area. That's where I'm targeting. Nasdaq, a little bit more tricky. You definitely have to be watching this a little bit more. However, you're looking for those bottoms for sure, but when we come back out to this level, we come back out to the daily, things definitely get a little bit more tricky. If you break below this key level right here, which again, you have not tested those previous lows about this range, about 10.7. In my opinion, you're testing those pre-COVID highs once again, and your range has to be down here at locally 10,000 flat on the Nasdaq. Again, would be catastrophic. That's a major, major crash, over 1,700 points on the NQ if you did have that. So that's a very aggressive standpoint, but for now, I'd be looking at this range around 10.7, 10.6 on NQ. Again, non-biased, what am I looking at? However, if data comes out positive, which is always a possibility, what am I looking at? For NQ, again, the same thing stands here. We're going to go back to the 15-minute. We're looking to see, will you get above this range, this 12,000 range? Can you ever mount back above it? That's what we're looking at. If you get back above 12,000, boom, we're expecting upside 12.25, 12.3. So it goes both ways. But I'm looking for breakouts. I do not want to trade chop. I do not want to trade this slight mid-range here. That's not what I want at all. Not what I'm looking for. And when we look at some of these bigger names, we come out here, yeah, you had potential. If we look at the big six, we've been talking about this range you've been trading in. If you break out of this, yes, there's a lot of room to run in the big six. If you don't know, we have Apple, Microsoft, Nvidia, Google, Amazon, Tesla. It's just a little index that we made here. If you break out of this, yes, you're extremely bullish on the market. But until then, you have to be watching this chart to see really where the momentum is, specifically in the bigger names. And that's why I'm watching this so closely. When we look at these and we come and look really closely at some of these big names here, in my opinion, it's pointing towards more downside. Look at something like Netflix. It looks like it's bear flagging. It looks like it's setting up for more of that downside. So as we come in here, again, it's non-biased, but look at how you're setting up here. It's looking like more and more downside wants to come into play. Tesla, you're trending at these lows. It's looking like you want to test that 550 range. We go to Apple. Apple's one of the few stocks that has any upside today. Probably the only bullish stock that was on the market. You come back to something like Microsoft. Look at this drop you had today. It's been following SPY very closely. You hit this range and you reject it on the day, almost $11. When's the last time you saw an $11 move on Microsoft? You're so close to those lows once again. Meta, all of these big names getting very close to getting back to those lows and making new lows. So when I'm looking at these, I have to take it into all this consideration. And I'm looking at where ultimately the up and downside is. So when I'm looking at these, I'm watching for these tops. And you're going to notice when you come here, there's a top on basically all of these. There's a very key range you're watching. So like Microsoft, you break up 268, chances are you're going up to 276 in a hurry. Apple, Meta, all these are very similar type of action. Nvidia, we ended up trading this. I mentioned this on YouTube. I mentioned this on Twitter. Once you broke back above this range of 150, we were targeting 155 and ultimately ran to 160. So once you get above these key levels, you start getting a lot of momentum. But the thing is, you have to get out of these key levels and out of this range type trading. And that's what we're looking at. And that's what we're watching Nasdaq so closely. And that's why, again, if you break above 12,000, you're bullish. You break below 11.7 with bad data, you're bearish and you're targeting new lows across the board, people, not just on Nasdaq, not just on SPY, most likely on everything. And again, I'm trying to keep it as unbiased as possible. And again, I have no positions open, so I have no horse in this race whatsoever. And if it means anything to you, Jim Cramer said tomorrow was going to be the bottom. So if you need any other reason to be bearish on the market, maybe this improves your reasoning going forward. So looking at this, that's how I'm looking at it. Now, what I do want to highlight is some of these big technicals we've been looking at. And these are bullish aspects, in my opinion. Junk bonds, they look bullish, honestly. This is incredible. This is another big reason I started closing my positions. You look like you want to break up here on junk bonds. This has been one of the best indicators of the market, of a leading indicator before you get a move. Junk bonds, you look good. The Dixie, the dollar, not gonna lie to you, this is one of your bearish indicators. It is pushing up like crazy. This indicates, in my opinion, that risk on the market is off. They don't want to have risk, especially when the dollar's pumping like this. That's one of the big ones. But we go back to something like yields, and we go to the US 10-year. You can look. You're still in that flag. You're still trying to hold down. You got to break for a while. You're trying to hold back down. You got pushed right back down. So looking at these things, it's showing me that there is potential to get a breakout. But the more we look at some of these things, you have to consider, based on data, based on where we're at, we're quote unquote not in a recession yet. We're stalling on growth. And finally, the Fed and the White House are saying this. Those are the red flags, in my opinion. And those are what's leaving me kind of up in the air with making a decision on where we're at. And looking here at VIX, you came down to that $24 level yesterday, and then you popped right back up today, about to 28 almost. So I'm looking here, and it's seeming like you're coming back into the same trend. You come down, you pop up, you come down, you pop up. So as we look here, I'm sorry if I can't give you a clear-cut answer going into tomorrow, but that's what I'm looking at. I'm looking at the key range breakouts specifically on Nasdaq. Again, where am I looking? You break above 12,000 and hold, you're bullish. You break below 11.7 and hold, you are bearish. CPI data will be very big and will give you the overall direction most likely. If you're not following on Twitter, I recommend doing so. I will keep you updated as I can, as much as possible. Everything I'll post it there so you're ready. Have a good one, traders.